While investors have been cashing in on new highs here in the U.S., there's been another major bull market run that you might have missed. Bob Pisani is at the NYSE to break it all down for us. Hi, Bob.
Hello, Melissa. Good to see you. You know, Japan's blue chip Nikkei 225 stock average soared to its highest level in almost 27 years. Good heavens. What's going on here? Well, look, first and most importantly, the domestic economy in Japan is showing more signs of life, and that's translating into higher corporate profits. That's the #1 story here. Now, you can see that in the performance of consumer names, domestic names like Takara Holdings. They own beverages and food and printing and medical supplies. It's up 55% in a month. Family Mart, Japan's second largest convenience store franchise. That's after 7-Eleven. They're up 24% in the last month. Soy sauce giant Kikkoman, everybody knows them. They're up 19% in a month. Now, then there's the exporters. You have a stronger U.S. economy, and you have a weaker currency. So the yen is near its lowest level against the dollar in almost a year. That makes exports more profitable. So look, conglomerates like Mitsubishi's up 13% in a month. Sony even up 8%. Even the beaten-up auto stocks, terrible year for them. Honda, Toyota, they've come off of their lows in the last month. Also remember that as part of its stimulus program, the Bank of Japan has been buying Japanese stocks through ETFs. So the state itself has been a regular buyer of stocks for a while now. Now, still, I encourage you, don't get too excited about this. The Nikkei is still only up 6% this year. It's notably underperforming the S&P. It's up about 9%. And while all this sounds wonderful to say, oh, it's a 27-year high in the Nikkei hit its all-time high in 1989. It is still 40% below that historic high. Talk about a lost 3 decades. Japan has still not recovered from the stock and real estate bubble that burst in 1990. The big issue is this: will the average Japanese household, which has bought bonds but not much stock in the last 30 years, will that average household finally sit up, take notice of these new highs, and really get a rally going, maybe back to those 1989 highs? That's what I can't answer, though. Back to you, Melissa.
All right, Bob, thanks. Bob Pisani at the New York Stock Exchange. Tim, is there a fundamental story behind this recent pickup?
There definitely is. First of all, earnings revisions continue to get better. It trades probably 20% cheap to Europe, which trades 20% cheap to the S&P. So valuation-wise, if you're looking at the big markets and the underperformance, even though, right, 6% relative to the S&P makes a lot of sense. Also, just the whole approach to capital allocation and what they're doing in terms of paying out higher dividends and giving that back to investors. You have to watch the yen, though, because if the yen starts to appreciate, I think you're going to see a lot of pressure in Japan. But right now, the yen's been slowly weakening against the dollar.
Again, but it's central banks overstepping their bound. I mean, but should the Bank of Japan be buying securities? I mean, that's really what it comes down to. I mean,
everybody else is.
Yeah, but when does it stop, though, I guess is the question. And how does it end well?
Yields are backing up in Japan. I mean, that if anything, might be. See, it's kind of the good news and the bad news, right? Because Japan wants to see a little bit of inflation. That's what Abe's trying to do with throwing everything in the kitchen sink. And yields have started to move. But you're,
so then
you're
why
right.
buy shares if yields are starting to move? Isn't that just sort of fuel in the fire?
Well, wouldn't you buy more stocks if you think bonds are starting to back up?
If you're the government.
If I'm the government,
right?
What's my question? Sorry.
Well, if you're looking to stoke the flames, right? At some point, you want to pull back. You're saying not yet.
Yeah,
by
look,
a lot.
I think they want to see a lot more inflation than what they have right now. But I do think that the move in Japanese yields, JGB yields, is also something people should be watching. It's a big part of the global dynamic.
Tim seems a little defensive here. I mean,
I'm always defensive.
Are you short the Nikkei?
I mean, by the way, it takes one to know one.
Yeah.
I mean,
well,
are you long Japan in any way? Stocks?
I own a couple Japanese
defensive.
banks, and I own some exporters that have a lot of exposure to Japan.
You're the puppet.
What are you
What's
talking
going
about?
on here?
What's happening? It's like a big side conversation. Nobody else.
I'm just sitting here minding my own business.
Share it with the rest of the world here, but anyway, we're going to move on. For more on Japan's amazing run, let's go off the charts with Chris Verrone of Strategas Research Partners to break it all down. Chris, what are you looking at?
Hey, Melissa, how are you? Yeah, we agree. I think this is the strongest bull market out there that's not being talked about. We brought along a couple charts. Here's Nikkei over the last couple of years. Let's remember, Japan's basically been consolidating for much of the year, getting up through 24,000 recently. Really important breakout. And we put it in context of the last couple of years. We had this great little uptrend. And then internally, every time we get an expansion in new highs, the rally continues. We had about 40% of the Nikkei make a 3-month high this week. That is a bullish internal signal. But let's put it in context of the longer-term picture here. This is Japan over the last 30-plus years. As we know, peaked in 1989 at 39,000, bottomed in 2009 at 7,000, and we have this massive 20-year base. Every rally the last 30 years failed at lower highs, except these last two. We now have higher highs. This is a major change of trend. And then I think importantly, when we consider Japan versus rest of world, this is Nikkei versus rest of world ex-US, making multi-year relative price highs. So you're getting paid in absolute terms, and you're getting paid in relative terms. How does this rank relative to some other markets here? Well, as we mentioned, we have S&P up here 9% year to date, but Japan now up 7, catching up. EM still down 10% this year. We think Japan is one of the strongest bull markets here, not getting enough attention. We like the internals. We like the fact that it's reemerging as leadership.
Chris comes over.
Got to. Has to.
Please. Stephanie will bring the chair in. Oh, Bree will bring the chair in today. Wow.
Yeah,
Bree
Bree.
Kelly.
Nice.
All right.
Welcome.
Chris, would you rather
Favorite game.
the Nikkei or the S&P 500?
Right here, I think you have more upside in Nikkei. And
Really?
I think looking out over the next couple years, we're going to make a call here. I think you're going to have Japan challenge the old highs from 89. I think that's the direction this is heading. It's all about TINA, right? TINA has moved. There is no alternative. It was a U.S. story the last 7 or 8 years. It's now moved to Japan. Earnings yield in Japan, 6%. Dividend yield, 2%. Where are JGBs? 13 basis points.
Can China be falling apart and Japan rallying?
You know, what's really curious here, think back to 2014, 2015, 2016, the last time China went through an episode. Nikkei went down 35%. That hasn't happened here. So either one of two things is happening. Japan is decoupling from rest of world, or the slowdown in China is maybe not as bad as we all think. I think that's a very important message. Tim, you talk about JGBs. JGBs are going up here.
Oh, yeah.
Right? So this is a kind of great rotation type trade as well playing out in Japan.
So, Chris, so if China is falling apart, but the Nikkei can still rally, could the opposite be true? At some point, could we see EEM, emerging markets, which are pretty heavily China, could we see that start to be pulled up by some of these emerging, well, actually some more, you know.
I think certainly tactically there's a trade here in EM. If you think about where we are with the calendar, beta shorts don't work from October through January, and EM is a beta call, right? So you have the calendar becoming part of a tailwind story here. You only have 25% of emerging market stocks left above their 200-day moving average. That's an area or a condition from which we've seen these things bottom in the past. And then look at some bellwethers. Iron ore bottomed back in July. Caterpillar making 6-month highs today. Copper's coming off its best week in 2.5 years. I think there's some evidence here that EM might be a trade.
Are there sectors within Japanese stocks or specific stocks that you like?
Well, think about Japan's a very top-heavy index. Two largest weights in the Nikkei are fast retailing and SoftBank. Both are breaking out from 10-year bases. Japanese pharma has reaccelerated. Japanese railroads have reaccelerated. And these Japanese banks are quietly acting a little bit better.
What are you seeing in terms of flow of funds, of capital being allocated away from the U.S. and towards
I think it's
Japan and other markets?
Sure. I think one of the calls here is the contrarian nature of the call. It is hard to get people very excited about Japanese stocks. It's certainly hard to get people excited about EM here. We have seen massive outflows. If you look over the last 3 months, you're in the 3rd percentile of all observations. That is a contrarian data point where you tend to get some positive response from the stocks.
Last quick question. As a catch-up trade in the 4th quarter, it's going to be a would you rather.
Oh, wow.
Would you rather? Okay, so you sort of
That's like a
answered
derivative thing in
it.
itself, right?
Nikkei, S&P 500, or EM, emerging markets broadly.
At the end of the day, we want to own leadership, and Nikkei S&P is still leadership relative to EM.
Okay, but then you said Nikkei over the U.S.
Yeah, I think that's an
So
emerging story
Nikkei,
here.
of those 3 choices, is the best trade going into
Nikkei is
the
our
end of the
favorite
year.
market right here, yeah.
Chris, thank you. Chris
Thank you.
Verrone of Strategas.
Would you rather?
It's a confusing game.
Yeah, you got that?
We've played it a million times.
Yeah,
Why
but
is
you know,
that
I get
confusing?
confused
It's
waking up in the
choose
morning.
one of 3.
Yeah.
Is that more clear to
it
you?
adds 50% more to choose from. See the math I just
What
did?
would you choose?
Interesting you say that.
Yes.
I think well, can I play my own set of rules? EEM started the year at 52.5 or so. It's made a series of lower lows and lower highs. I think that will continue. If you want to buy that, you buy it on a breakout. You don't try to pick a bottom. The breakout is above 45. So in the would you rather, it's EEM on a breakout above 45.